Hello and welcome to Morning Markets. I'm Roger Peterson. Thank you very much for joining us. Here are some of the stories we're tracking for you in the BNN Bloomberg newsroom. At a meeting of the G7 finance ministers, France's finance minister said the G7 group has not reached a deal yet on releasing oil stockpiles. This news comes as the Middle East war drives crude prices sharply higher. A release from global stockpiles could help ease supply disruptions that have pushed Brent crude to upwards of $120 at one point earlier today. It's about a 110 right now. Shares of Live Nation are moving higher. This comes as the entertainment company reaches a settlement with top U.S. policy and politics federal antitrust authorities in a lawsuit that accused the company of illegally monopolizing the live music industry. The agreement requires the concert giant pay roughly $200 million U.S. in damages. However, the settlement will still need to be approved by a judge. Shares of Xenon Pharmaceuticals are flying today. Look at that. On a day where everything else is in the red, it is up more than 46%. The pharma company generating positive results from a critical late-stage human trial for its epilepsy treatment and will apply later this year to market its drug in the U.S. The company says patients taking a 25-milligram dose of its drug called azetukalner over a 12-week trial saw a 53% reduction in seizures. To the markets now, and the TSX actually bouncing back a little. It's a relative turn. When it opened this morning, it was off by close to 2. It's now down by about 1%, red in most of the sectors right now. South of the border, not much different, although, again, they are recovering a little bit too. The S&P 500 off by 0.7, the Dow by a point, and the NASDAQ is off by 0.37. All of them had been off by more than a percentage point earlier this morning. Well, markets, of course, are under pressure this morning as the war in the Middle East continues. This comes with the price of oil at one point hitting nearly $120 a barrel this morning. Joining us now to talk about it, Alan Small, Senior Investment Advisor at Alan Small Financial Group, IA Private Wealth. Alan, thanks as always for joining us.
Great to be here.
Right now, we're looking at oil. Last time I looked, I think it was at about 110. What are your thoughts on it? Where do you see it going right now? Oh, it's okay. It's back down. It's back down to 100 now. It's all over the place.
Yeah, definitely. We saw some relief, I think, in the wee hours of the morning when I guess the G7 announced that they may be releasing some of the oil reserves that they've built up in each of the countries. Obviously, that is an option for the countries, for the United States that has their oil reserves that they can always tap into. We've seen them tap into these oil reserves in the past. So I think that put a bit of a calmness to the oil markets, brought down the price. We saw Brent crude and WTI at one point this morning almost trading at the same price. We know Brent usually trades a couple of dollars above WTI, West Texas Intermediate, of course. And so overall, I think, the heightened situation in the Middle East is only going to keep oil prices elevated. But I think for those that are investing in energy stocks, we saw CNQ, I think just on your show just a few minutes ago at record highs over $60 a share. And some of the other oil names that we're seeing in the U.S. or all around the world, I think you have to be a little bit careful if you're an investor, because I think at some point oil prices will pull back. Obviously, whether it's going to take some announcements on what's going on in the Middle East, or maybe announcements from G7 countries adding more oil out there, and or announcements from OPEC or anybody like that. So I think you have to be careful with the price of oil. It is obviously a very volatile, as you said, right now. But I think over the next few weeks, I think you could see oil prices definitely decline back to lower levels.
And going back to the last time the G7 freed up some oil, what kind of an impact did that have? Was it anything long-term, or was it more just a short-term fix?
I think it's more of a short-term fix. I think it's a short-term Band-Aid solution until, whatever happens in the Middle East works its way through. I don't know where we don't know where the war is headed, where it's going. Obviously, we do know that wars don't last forever, and the effects on the markets usually are positive. We see the volatility that we're seeing, but then after the conclusion of the war, however it ends, whether there's a ceasefire, whether there are some concessions made on both sides, nobody knows. But usually, a few months after the end of a war like this, you definitely see markets rise. You will see oil pull back, and you will see the markets regain some traction once again. Volatility will be out of the market. So I think what the G7 nations, if they are going to put more oil into the marketplace to help bring down the price of oil, I think it is a short-term phenomenon. Obviously, they cannot maintain putting more and more oil out of their reserves for too long. But the hope is that they can do that for long enough until there's some resolution out of the Middle East. All
right. Crises can be an opportunity. Where are you looking right now?
Yeah, it's interesting. I think even today you're seeing that, for example, the NASDAQ not down nearly as much as you probably may have thought. The Dow has been taking it a lot harder. The TSX is kind of mixed, obviously, because of the oil is higher. Gold has been higher, or maybe even a little bit flat to slightly higher. But I think it's the NASDAQ that I'm looking for opportunity right now. The big cap tech names, you take a look at a name like Microsoft and Meta and names like that. I think they're extremely cheap. I think they were cheap before the conflict in the Middle East broke out. And I think they're still cheap till this day. And I think these are the names that have the ability to actually continue to move higher even at this time. We saw software stocks last week actually improve, do a lot better. ServiceNow, Salesforce had actually good weeks last week, even during the Middle East conflict. So that's where I'm looking right now. I think the tech names were sold off prior to the war breaking out. And I think those names were cheap prior to the war breaking out. And I definitely still think they're cheap today. And I think investors can actually, hide out in some of these big cap tech names, because I don't think they're as affected by what's going on in the Middle East as much as other sectors.
Now, any concern about some of the Middle East investors pulling out of any of those groups?
I think there's always a concern, but in my opinion, I think that over time, I think that these are the areas of the market where we see the Saudis investing and the UAEs of the world. More and more money is going into data center, AI, et cetera. So I don't anticipate any of the foreign countries or countries around the world pulling their money out. I think they're going to be looking for a place to put their money and to invest even during these times and in the future. And I think that is only a positive for these big cap tech names.
All right. What are you shying away from right now?
Well, obviously, a lot of people are shying away from areas like, airline stocks, hospitality sector. The banks have been really hit hard, although I'm starting to look at banks once again. You're looking at banks, for example, in the United States, really pulling back. A name like JP Morgan down quite a bit from the highs. Bank of America, some of these big money center banks in the U.S. are pulling back, and they could represent good buying opportunity once again. Once we can get past through what's going on in the Middle East, obviously banks are the bloodline of any economy. If there is a slowdown due to what's going on, higher oil prices, bringing down growth, higher costs, bringing down growth, that will affect the banks. And again, keep in mind, the markets are the best barometer looking forward, right? They're a forward-looking mechanism. They're telling you that they're nervous of what's going to happen to the economy if this war should carry on for another month or so. What's going to happen to economies around the world. And that's what the market is telling you. And that's what bank stocks are indicating by pulling back. So I think could be a buying opportunity at some point down the road. But right now, I'd probably be shying away from those areas.
Okay, we've got to wrap it up there. But Alan, thanks as always for joining us.
Thank you.
Alan Small, Senior Investment Advisor at Alan Small Financial Group, IA Private Wealth. Coming up, we're following the price of oil and its rapid rise, and it's a bit of a descent right now as tensions in the Middle East intensify. The war in the Middle East has all but closed the Strait of Hormuz. For more on the conflict that is unfolding with Iran, we were joined earlier by Andre Sire, Associate Professor at the Department of Management at the University of Toronto and the Rotman School of Management.
Indeed, Canada is a net producer of oil, of crude oil, and it's benefiting in some ways. You can see the price is also going to definitely benefit Alberta. But it is a paradox, it's a contradiction. What happens is that oil is a global commodity. And because it's a global commodity, it's going to be traded it's going to be traded by international benchmarks, international indices. You mentioned Brent, there is also the WTI. So even though we are exporting oil, we're definitely going to have to pay international prices for it. Because in a way, also we are importer of oil. For example, we still need to buy refined oil from the US around 30%, and we still need to buy internal oil for every purpose that we have here in Canada. So even though we are net producers, we just still need to import oil. We still need to buy international prices because it's a global commodity.
Professor, what's your view on the insurance system? There were chatter that there's potentially going to be government-led insurance to allow the ship to be carrying oil outside of Hormuz. How credible do you think that is?
I do think it's credible. I think there is a big effort we heard this during the weekend, I imagine, that the United States is willing to provide some insurance. Because what's preventing one of the reasons that is the ships are not flowing through the Strait of Hormuz is because the insurance companies they are reducing their level of insurance, they are reducing their what they can cover at the moment, and this is definitely one of the big blockades at the moment. So definitely there has to be a negotiation with insurance companies, and I believe it's credible. If the situation persists for longer, it's likely that there will be some effort there by countries such as the U.S. to help that situation with insurance companies for sure.
And if the U.S. does do that, where does that leave the insurance companies? I mean, they don't want to send ships that have run the risk of sinking and the disaster that would be. And I know they wouldn't have maybe be on the hook for the coverage of it, but they'd still be involved in this.
Right. So I must say that this has not yet been very well defined, right? There's still rumors and it's really complicated now to know. There's so much uncertainty in so many different levels in terms of the insurance. We only know that there is some discussions now. How is that going to work? I would imagine, if I were to speculate, which is a big mistake of my part probably, is that this would be a temporary solution. And definitely it's just to make sure that some flow is going out of the Strait of Hormuz for sure.
What's your view? So Hormuz is about, let's say, give or take 20% of global production of oil on a daily basis, right? So what do you think the GSET reserve, strategic reserve, can make up of that? My view is that it's not going to be sufficient, but you're the expert. So do you think it at least give us a few days, a few weeks in terms of supply?
Absolutely. There will definitely be... When we think about markets, right? So we are in the situation now where we are cutting supply very aggressively because of the Hormuz closure. Virtually it's closed, right? It's 80% reduction capacity, and we have still demand at the same levels that we had before. So by putting more oil into the market, by providing the supply from the reserves, we can maybe improve supply a little bit so that we can try to reduce those costs. Now, I think that it can work temporarily, right? For sure, it can help reduce the price temporarily, but it always depends on how long this war, how long this conflict will continue. So if it continues for a long time, I agree with you, then it's going to be complicated. We're going to deplete our reserves. Another thing that can happen is this country is also going to start looking for other markets. For example, maybe Canada can help there. The only issue is that the consumers here in Canada would also suffer, right? Because we're going to export more of our oil. But at the very least, we know that Canada is these countries, they're going to look for more stable countries like Canada, where they can have some stable supply. So I agree with you. It would be a temporary solution. It would definitely help reduce some of the anxiety that we are experiencing. But in the long term, I'm not sure if this is the optimal solution.
And you mentioned with Canada being a possible source, but they also are going to look and go, Canada can't really supply it, can it? We don't have the capabilities right now to get any more out of the ground, do we? Or minimal more?
Absolutely not. So Canada, as you know, we are on the west, we are big producers of oil, Alberta, as everybody knows. And on the east, we are just big consumers, right? We have Ontario, Quebec, everybody wants to consume those oils. And it's surprising that it's cheaper to import oil from the U.S. 30% is easier to import oil from the U.S. than from Alberta, and also refined products and refined oil products, derivatives, and so on. So we do not have the capability, and something that we have been discussing this last few years. And I hope this brings this discussion back to the top of our minds of how can we integrate the provinces, for sure.
And just how long would this have to go on in the Middle East and the Strait there with the shutdown for Canada to actually benefit, where people would turn to Canada and take a look? I mean, because a lot of people I think are looking, this could be over in 2 weeks, could be over in a month. How would it have to go? Would this have to go a year, and then people would start to want to invest in Canada with this?
I think because it would not be short. It would have to be a few months. I'm not sure if it's a year. It's just too hard to estimate at this moment. Mm-hmm. But it's a structural change, right? So it would have to take some time. And everybody's not... I think there is a sense now of not taking risks, because we hear from the U.S. administration that this would be limited in time. It's not going to be months, but at the same time, we hear rumors that it would take a long time. So it's similar to the tariffs, right? Everybody's concerned, should I build the factory here or not in the U.S. because I don't know if the tariffs are going to remain the same, going to increase. Somewhat the same. We don't know whether the oil price is going to stay that high for so long. It is not good for multiple reasons that it doesn't, because, for example, we are cutting supply to Asia by 70 to 80%, right? Japan is heavily dependent on the oil from the Gulf states. So we're going to start feeling the impact on multiple different products. So I don't think it's going to be hard for them to make the decision. Let's just change to Canada or to other countries. But I think it would have to be like this for a long time.
That was Andre Ciré, Associate Professor at the Department of Management at the University of Toronto and the Rotman School of Management. Coming up, we'll take a look at some market movers with Bloomberg's Monique Molina. Let's see what's moving on the markets today. We are joined by Bloomberg equities reporter Monique Molina. Monique, thanks as always for joining us. Live Nation, are they done with the courts now?
The answer for Live Nation is maybe. So they reached a settlement today with the Department of Justice in the U.S., and that's what's really causing a lot of their share rise today. Their shares were up the most since April of last year. Analysts really see this settlement as positive. It avoided the worst case scenario that would have required a divestment of Ticketmaster. So they really see a lot of opportunities for the company going forward, since they'll be able to retain Ticketmaster, and the settlement only requires them to allow third parties to also list on ticketing, which they don't see as a big risk, as well as a couple small divestments from amphitheaters and some rules around amphitheaters. So this is really good for the company as a whole, but it doesn't mean that everything is over just yet. There was about 40 U.S. states that were involved in this case, and not all of them have signed on to the settlement. The New York Attorney General came out and said that she is not going to sign the settlement and is going to pursue further litigation, and a number of other states have said the same. So while this does remove the biggest overhang for the stock, which was that fear around having to sell Ticketmaster, there still will be a bit of risk going forward with some of these states that aren't agreeing to the settlement.
And will they continue with this, where they have to open up some of their markets, or is this all on hold until the rest of the court issues are resolved?
So the settlement hasn't been fully signed off by a judge yet. That will still have to be determined in the near term. So for now, this just kind of holds things in place while the states that are deciding to pursue litigation will be doing that on their own, since not all of the states are involved in that. But it's still a big boost for the company because this, like I said, had been a big overhang for the stock, something a lot of analysts have been really concerned about. So the fact that the U.S. Department of Justice is saying that Ticketmaster doesn't need to be sold is a really good signal.
All right, gold should be a safe haven, but it's a bit of a roller coaster right now.
Yes, so gold and silver are both down today, and that's really weighing on the mining shares. Like you mentioned, usually in a time of uncertainty, gold is a safe haven. Investors will sometimes kind of flock to it. But we're not seeing that happen right now. Analysts at JP Morgan are saying that some of that boost that it got out of the Middle East war of people fleeing to safe haven assets has kind of waned now, and that's somewhat typical in terms of conflicts, people jumping there at first and then kind of starting to pull back. And part of this also has to do with some of the fears around inflation. With the war going on, there's concerns that U.S. inflation is going to be heightened. We are seeing the high oil prices weighing on like consumers and stocks and airline stocks. And because of that, there's fears that interest rates are going to have to stay higher for longer. And that's not something that fares well for gold. Gold does best in low interest rate environment. And we're also seeing the U.S. dollar rising today. And that also is not positive for gold because that can make gold more expensive to buy. And both of these factors can weigh on demand, which is what we're seeing today and why we're seeing the gold stocks down with those metals prices.
All right, and we're almost out of time, but just quickly sneak in about the chemical stocks. How are they doing?
So the chemical stocks, they're doing really well. They got an upgrade today at RBC for Dow and LyondellBasell. They've been getting a number of upgrades from firms across Wall Street over the past week. They're really seen as having an opportunity coming out of this Iran war. The Strait of Hormuz, which is right now blocked because of the war, transports a lot of chemicals globally. So for the companies that are North America based, they really have the advantage right now because they're still able to move their products. And because of that, we're seeing a rise in the chemicals prices, and their margins are expected to benefit from that.
All right, Monique, thank you as always for that. Bloomberg's Monique Malima. Coming up, we'll get more on the shockwaves being felt through the global markets as oil prices continue to soar and push gas prices higher here at home. At a meeting of the G7 finance ministers today, France's finance minister said the group had not reached a deal yet on releasing oil stockpiles. This news comes as the Middle East war drives crude prices sharply higher. A release from global stockpiles could help ease supply disruptions that have pushed Brent crude close to $120 a barrel. That happened earlier this morning, back down to around 100 right now. Saudi Arabia has started reducing oil production as the near blockage of the critical Strait of Hormuz starts filling storage tanks. The cuts by the world's biggest oil exporter followed the United Arab Emirates, Kuwait, and Iraq. Some of the countries have been turning production lower so as not to overwhelm storage too quickly and then have to do a complete shutdown. The near standstill has clogged up exports, sending oil above 100 a barrel and risking a spike in global inflation. Shares of Hims & Hers are soaring today. The U.S. drug maker has struck a deal with Novo Nordisk to start selling obesity drugs. The partnership comes as somewhat of a surprise after Novo sued Hims in February for launching a copycat version of its new Wegovy weight loss pill, a linchpin of its growth strategy. The Danish drug maker accused Hims of breaching the U.S. patents on the ingredients behind its best-selling medications Ozempic and Wegovy. Taking a look at the markets, the TSX still off by about a point right now. It's been hovering around there for the last hour or so. It was off sharply this morning. Still down, but bounced back a little bit. South of the border, same thing. Red everywhere you look. But the NASDAQ trying to get into the green. It's pushing towards it, but S&P 500 off by half. The Dow by 0.78. You can see the NASDAQ down by 0.15. The son of Iran's slain supreme leader has been named as his replacement by a panel of Shia clerics. For more on this, we were joined earlier by CTV's Scott Hurst.
An already volatile situation. A new wave of airstrikes is hitting Tehran after the Iranian regime launched more attacks on Israel and Gulf countries hours after Iranian state TV said Mojtaba Khamenei, the son of the country's late supreme leader, as you mentioned, has now been named his successor, meaning the younger Khamenei will likely have a central voice and a central role in the ongoing war strategy. Now, in the meantime, as you are recovering significantly. Oil prices have since skyrocketed, leading to more concerns of higher energy costs fueling inflation, with Iran's stranglehold on the Strait of Hormuz, leading to G7 nations holding an emergency meeting to discuss the surging oil prices, which could mean dipping into emergency oil stockpiles in response to the soaring energy prices. And now, as we've seen, particularly for Canadians here on our shores, the ripple effect in the immediacy means we've seen higher gas prices. And so we're seeing these ripple effects right across the world on the broader economy because of the ongoing fighting in the Middle East, Andrew.
Yeah, it is. Wow, we're looking at an oil chart right now. I see oil actually, North American crude, slightly below the $100 level right now, but it's still up exponentially in the past few days.
And that has been, kind of one of the main drivers of this ripple effect right across the world, where we're seeing it firsthand for us here in Canada, hitting our wallets right away with gas prices going up significantly. Just one of the many factors and one of the ongoing concerns that this war that was launched by the U.S. and Israel targeting the Iranian regime will have continued effects right across the entire economy.
And Andrew was speaking with CTV's Scott Hurst. The oil prices, of course, continue to rise as major Middle Eastern producers cut output, and tanker traffic through the vital Strait of Hormuz remains at a standstill, choking off global supplies. For more on the impact of this on the wider markets, we were joined by Hadiza Jatu, Vice President and Portfolio Manager at Mackenzie Investments.
The news over the weekend was the appointment of Khamenei, the Supreme Leader's son, as replacement, and clearly showing that Iran's stand is going to continue to stay hard and fight back, rather than kind of coming back to the negotiating table. And I think that's exactly what we're seeing where oil is at now. I also think that there's some form of consideration around supply. Storage is getting somewhat overwhelmed. Production has been stopped in Kuwait, in Iraq. So all that really led oil prices to now reprice the risk of an energy supply shock that is going to be a bit more extended than we expected in the first place. Now, I always look at situations like this from a viewpoint of winners and losers. And as Canadian, this is actually a pretty good thing for Canada and for Canadian dollar, right? Canadian dollar is somewhat a risk-off currency that tends to sell off when risk is selling off, equities are down, Canadian dollar is down. But now with oil above 100, we're going to see recorrelation between oil and Canadian dollar, i.e. higher oil prices mean higher Canadian dollar.
And that's good. We were talking about this off air. We said that's good for now, but
it's good until it gets bad. It's good because term of trade, Canada is the third oil producer in the world. As we know, about 5 million barrels that are exported mainly in the U.S., 95% in the U.S. through the XL pipeline. So that's positive for term of trade. And I'm sure Bank of Canada, during their next meeting, is likely going to lift growth expectations. In the last MPR in January, they had penciled in about $55 a barrel, was significantly higher today. So that's positive from a growth perspective. But that means also inflation is going to creep up. And Bank of Canada, in that context, will not be able to cut rates. So that's where it gets tricky. The second consideration is when you have oil prices above $90, the study has proved that that's where chances of a global recession start rising, because you're disrupting demand, right? Oil is the one commodity that goes in every single thing we have. It goes in our cars, goes in producing building material, goes into even producing some commodities to the production chain. So that's pretty significant.
for the global recession, how big is the window? How long can we sit at 190? I mean, 100 at one point, it was 120 today.
Yeah.
How long can we sit around here before it starts? We start looking at
not long, and you can see the response already with the G7 gathering today, trying to see if they can effectively float the market with oil from strategic reserve. I don't think we can withstand more than a couple of weeks at 100.
It's that tight, and that'll start triggering.
It is absolutely.
How long can the G7? How much is there in their reserves?
I think it wouldn't be enough, right? We know already in terms of the reserve that they could be able to make up for a couple of weeks, but say that this is a sustained solution, they would be draining reserve very quickly. The Strait of Hormuz has never effectively been closed. It's been closed now for almost 10 days. And even if it's reopened, you're going to have a lot of time for oil to kind of filter through the economy again. And those reserves, as big as they can be, are not going to be sufficient to make up for that.
So it's going to have to rebuild. Now, we were talking about the Canadian dollar. Can Canada benefit at all from the situation in the Middle East, or is our oil still a different beast from what's there and what we can do with it?
It is. There is a metric called API that measures somewhat how easy and how somewhat the quality of oil. This is a matter of volume and also quality. The Iranian oil is almost the sweet spot in terms of refinement, in terms of transportation, and Canadian oil is a bit heavier and takes more time to get processed, as we all know. While they can benefit from it, there's no real replacement for the Middle East oil compared to what we have in Canada. So yes, on the margin, it helps. It helps for the U.S., and we know we're exporting more than 90% towards the U.S., but we also have to be mindful of the risk of having internal demand consume some of that Canadian oil instead of exporting it. So it's somewhat limiting the impact of term of trade if we have to consume more oil because we were not able to buy oil from anyone else.
All right, the price of oil continues to surge, at one point topping $100 a barrel for the first time since 2022, almost 120 in fact at one point. How is this impacting today's markets, global trading? We'll have more on that after the break. Markets remain under pressure as the conflict in the Middle East continues, rocking global energy markets. This weekend, oil rose above $100 a barrel for the first time since 2022. It's calmed down, but for more on this, we were joined earlier by Jim Thorne, Chief Market Strategist at Wellington Altus Private Wealth.
Right, you sell parabolic moves, and as we saw earlier, the chart is parabolic. Oil's in extreme backwardation. Isn't it interesting that Karg Island, the key Iranian export island, has not been touched? The Secretary of Energy was out this weekend saying that the Strait of Hormuz will be cleared up in a matter of days.
Jim, let me interrupt you there. Backwardation is where short-term prices have soared relative to long-term prices.
Are extreme,
yeah.
Yes. So,
but you're saying a year out, oil hasn't really moved.
Right. And the same thing with the VIX or the volatility index when you have the near-term contract or the spot contract way above where it is out three months.
Yeah.
Typically, that means volatility is going to decline. And when volatility declines, risk assets start to appreciate. So I would be suggesting, and what I've been talking about, is you should be fading this rally in energy and in gold. And you should, be thinking about what's your shopping list. Take advantage of the volatility, and I would expect to see some clarity in the near term.
And I kind of cut you off there. Sorry, you said the Americans are insisting they can clear the Strait of Hormuz.
The Secretary of Energy was on TV this weekend basically saying, give us a couple of days and that's going to be done. Mm-hmm. And so it's, it's a matter of insurance. It's a matter of clear passage. The U.S. military will take care of that, and then we get the flow coming back in. And then, Andy, what I think is very interesting and what the market's telling you is that the world is awash with oil right now, and that's why the G7 is talking about it, but I don't think we really need it. This is a fear trade. This is a view that this is going to escalate further. Mm-hmm. I don't think it's going to escalate further. I don't think the president is into regime change. I think he just basically wants the Iranians to stop sponsoring terrorism and stop attacking Israel. And we'll see with this new regime or this new leader what will happen. But President Trump is not a neocon. So I think cooler heads are going to prevail, and the market's going to look very different in the next couple of weeks.
It's interesting. You say that in Tel Aviv, the stocks have not been selling off?
No. And so we're here, like I always say, we're here clutching our pearls as of Friday. Tel Aviv was up 7% higher relative to the S&P 500. So maybe the Tel Aviv doesn't have all the algos freaking out on the headlines, right?
I guess one thing, of course, we get into military strategy here, but the Iranians could keep up a gadfly approach. They could have small patrol boats sneaking out and just sparking fear among shipping owners, and that could drag on for a while.
Sure, and the Iranians, if they were really serious about creating economic damage, they could blow up Karg Island. That's the whole thing. This island, this massive export island in the middle of the Strait of Hormuz, nobody's touching it, Andy.
Whose island is it? Sorry.
It's Iran's island, and that's where all the oil gets made. That is the main port and shipment area where the cargoes get loaded for the rest of the world. Nobody's touching it. So if we wanted to have mutually assured destruction, Andy, and you and I were gaming it, we would blow that island up in a New York minute.
I mean, it's very different from 73, 74 in that the Arab countries united to cut back oil supplies deliberately. And we're sure not doing that deliberately this time.
Exactly, but that's how we're framing it, right?
Yeah.
And it's not the Iraq war in 2002 and 2003. President Trump is not President Bush. They are not in for regime change. So, but yet what we do is we throw that on top. Everybody freaks out, $150 oil. And I would suggest to you at $100, if I said major war in the Middle East and $100 oil, you'd be sitting there going, well, I thought it was supposed to be 200 or 300. Same thing with gold. You know, gold is sitting there at 5,000. I thought with a major geopolitical crisis, remember, everybody's buying this for the geopolitical risk. Why isn't it at 6,000 or 7,000? Right? The smart money's fading this rally, Andy, and they're going in and picking off stocks that are on sale.
You have some stock ideas for us. Royal Bank of Canada, people should take a look at that, you think?
Yes, if Tiff Macklin is unwilling to cut rates, and if you look at the last quarter earnings, 17% increase in personal banking, that was caused by individuals renewing their mortgages. And so if they're going to be doing 2/3 of their mortgages this year. Royal Bank is a fee income juggernaut. It's pulled back to a nice support level. I would be picking at Royal Bank right here.
NVIDIA, you're interested in that one. Maybe we'll put up a one-year chart.
AI is, you know, the U.S. is going to become an AI leader. People are not talking about how the U.S. military is using AI in the Middle East. This is a leader. You want to buy leaders when they're on sale and they're irrationally being sold.
And Goldman Sachs, you think, is going to do okay as well?
Goldman Sachs is right back to the 200-day exponential moving average, upward sloping. You want to buy, if you're in a secular growth and, a structural bull market, you want to buy the capital markets. And Goldman is a great way to play capital markets.
A friend of mine is very tech savvy. He was building himself a website. He said, well, he buckled and he just got Anthropic's Claude to do it. He said it was just incredible. Things that would have taken him days, he was doing in an hour. So stocks like Thomson Reuters have collapsed. They bounce back a little bit, these software names, data names. You think Thomson Reuters is a buy right now?
I like that, or a company like Oracle. What you want is companies that have data or intellectual property. And I love Thomson Reuters for their legal library. Yes, there's going to be bumps along the road, but they've all been the baby's been thrown out with the bathwater. And look, Andy, there's been a counter trend rally in software, in Bitcoin, all these companies that have been thrown out. And then there's other companies that everybody's piled into, like Walmart and Costco. The fear trade has gone too far. That's where the bubble is. Risk is perverse. And then when you have cannons going off and you're in war, you want to sell safety and buy risk. That's the objective.
Andrew was speaking with Jim Thorne, Chief Market Strategist at Wellington Altus Private Wealth. Coming up, how 3 federal by-elections that were announced over the weekend are pivotal for Canada because they could give Mark Carney a majority government. More on that next. The microbrewing industry in Nova Scotia is going through a bit of a reset. Numerous breweries have shut down, and company owners are now asking both levels of government to implement a process that allows them to have a better chance to succeed. CTV's Paul Hollingsworth has more.
This craft brewery recently celebrated 10 years in business.
We make great beer. We have great staff.
But co-owner Danny O'Hearn worries future success is not guaranteed. The federal government's alcohol escalator goes into effect April 1st, bringing a tax hike of 2%. Smaller breweries also operate under the same regulations as larger brewing companies. The more beer they sell, the more they are charged by the provincial government.
In Nova Scotia, we have the same market as they do. When you hit 15,000 hectoliters, we are now taxed from 40% to 84.5%.
O'Hearn says it limits the ability to make a profit in their home province.
In New Brunswick, we make more money selling our beer in New Brunswick than we do in Nova Scotia.
As many as 10 Nova Scotia craft breweries have shut down since 2024. Retail analyst Bruce Winder says it could be a case of the brewing industry growing too fast in a small province.
It's a growth industry. Everyone and their uncle gets into it. You have massive expansion. You have too many players. And then what's happened is governments, have some fairly tight regulation on this that limits the margin.
Dalhousie University professor Dan Shaw says the beer market in North America has seen a dip in sales.
The consumption is going down by 4% a year in the last year. Weed sales has replaced, is a substitute.
Danny O'Hearn fears even more small breweries could close in the future. He hopes both levels of government step in to ensure the industry doesn't continue to shrink. Paul Hollingsworth, CTV News, Halifax.
Well, the Prime Minister announcing on Sunday that by-elections will be held in 3 federal ridings on April 3rd. And these by-elections are pivotal for Canada because it could give the Liberals a majority in the House of Commons. For more on this, we were joined earlier by CTV's Judy Trin.
Over the past few months, with Conservatives crossing the floor, 3 of them did. The Carney government has been criticized for trying to get to a majority by poaching and not through what they considered fair means. Well, this will silence those critics if the Liberals are able to win all 3 seats. Now, the 3 by-elections are being held in 2 Toronto area ridings, Scarborough West, as well as University Rosedale. Those seats were previously held by Bill Blair and former defense minister and former deputy prime minister Chrystia Freeland. They're considered safe seats. But the 3rd seat, Andrew, in Terrebonne, Quebec, that is a suburb outside of Montreal, that is going to be a really tough fight because in the general election, the Liberals only won that by 1 vote. And then that result was nullified by the Supreme Court after it ruled that it had to be it wasn't fair because of a mishap in terms of a mail-in ballot involving the wrong postal code of the election office. So that's where we're at. Expect the tightest race to be in Quebec.
And what are the real chances that the Liberals win? I guess incumbent governments often lose in by-elections, don't they? Because voters are just feeling ticked off.
Well, it'll be interesting to see. I think what the polls have shown is that Mark Carney and the Liberals have widened their lead from the Conservatives. They are up 11 points. In terms of leaders, Carney has widened his lead over Pierre Poilievre in terms of preference by voters by 30 points, according to some polls. So you see that widening gap. So I don't expect that in the Toronto area that those 2 ridings will flip in any way. But I do think that Terrebonne, that we should take a look at Terrebonne because the same 2 candidates are running against each other again. And because it was so hotly contested the first time, you can expect both parties to devote a lot of resources into winning it. So, but obviously, Mark Carney is hoping that this is the way that he is going to get to a majority.
And Andrew Bell was speaking with CTV's Judy Trin. Well, Know Your Options is back. Tune in Wednesday at 3 p.m. Eastern to have all of your options trading questions answered by Chris Tom of Moat Financial. Send us your questions to knowyouroptions@bnnbloomberg.ca. Market Call is coming up next, and today on the show we have Bruce Campbell. He's president and portfolio manager at Stone Castle Investment Management. He will be taking your questions on Canadian stocks. And let's take a quick look and see how the markets are shaping up. You can see oil has calmed down a little. It's a relative thing. It's still up 5%. It's still at $95 a barrel for WTI. But at one point this morning, it was at nearly 120, which is the highest we've seen since the Russian invasion of Ukraine in 2022. So it's getting a little more stabilized on the likelihood that we may see the G7 release some of their reserves of oil to help control the prices and get oil through to countries that need it. But for now, oil is still up. It's still up significantly in the last 2 weeks since the attack on Iran by the U.S. and Israel. And right now it is at 95. Looking at the markets, the TSX still hovering around off by about a point right now. And it was off on Friday, of course. A bit of a struggle going on there as people try to figure out what's going on. And materials index taking the biggest hit, and consumer discretionary spending also discretionary. That one is off by 2.2, and the materials up by 2.3. Now there is a mover though, Xenon. They're on the NASDAQ, but they're Vancouver based. So we're going to call them a Canadian company right now. Xenon Pharmaceuticals, they're up almost, what are they at now? 47% after the biotech said its experimental epilepsy drug azetukalner met the primary endpoint in a phase 3 trial for a focal onset seizure. One analyst, Brian Scorney of Baird, says X-TOL2 knocks it out of the park, and you can see it is surging right now, nearly 50%. And quick look at Wall Street, NASDAQ almost in the green. They're bouncing back, but still everybody's struggling right now. Thanks for watching Morning Markets. We'll see you back here tomorrow.